Hello, members one and all of the Salivation Nation, with an historic look at gold prices over the last 100 years. Now, I just recently had published a video outlining the same data for silver, but a user here in the community had suggested I do the same thing for gold. So this is an outline and a look at gold over the last 100 years. And before we start getting into the data behind this, I will note one big difference between gold and silver is how it's been used in civilization that has spanned beyond multiple generations and multiple cultures through thousands of years. Typically, the biggest difference between gold and silver is gold has really been treasured a lot more. It's been held. It's been valued as a great status of wealth and wealth preservation. And silver is as well, but silver has been used as money, and make no mistake, gold is money as well. But silver has been used as money more commonly than gold has over those years, and I liken it to essentially today how many people spend $100 bills. You don't see many $100 bills in circulation, yea, though they are just as much money and much more valuable than a $20 bill. You see many more $20 bills in circulations. Well, the $20 bill is essentially can be likened to silver in terms of its commonplace and being used in transactions here in America. You know, you can take the same example and apply it to your nation's currencies, and then a $100 bill is used less in transactions, but it is certainly valued, and it certainly is worth every penny of its denominated value. And so that can be tied back to gold as well. You know, it's not very often you would see in America here people going around with $20 gold pieces just spending them willy-nilly. Typically they would have silver dollars, silver halves, quarters, and dimes. So that's one of the major differences between the metals there. So let's take a look here at the raw numbers. Just as we did for silver, we'll do the same thing for gold, and we can see quite a telling tale here with this graph showcasing the different spikes, sort of correlating with what we saw with silver. First off, in 1980, we had a large spike with gold, as we did with silver. Gold sort of followed silver in that case. And then in around 2011 and 12, when we saw that huge spike, both in gold and silver. So very fascinating to see indeed. We'll notice here that it's been relatively flat, well, very much flat for many years prior, when the price of gold was set at $35 an ounce. And then before that, it was around $20 an ounce, which was what you would find in a $20 gold piece during those times. So very fascinating indeed. And then when we move to the petrodollar, you see our first sort of realization of the real price of gold at the time. We had the move to the petrodollar. We had the oil embargoes and the like that occurred, and then we saw that spike in prices of gold. And what happened after that? Well, the prices subsided back a bit. Markets normalized. There was a correction. But even at its low here, it's still much higher than it was in prior years before that spike. The same thing happened in 1980. This prices spiked up. There was a recovery period, a correction. And even at its low points, much higher price than it was in prior years. It's pretty amazing. So these recovery periods, when the price normalizes, are typically much higher than the prior years in terms of price. Moving ahead through the 90s, and we saw it kind of dip down. And I remember this period very accurately in history because I was collecting at the time, but I didn't acquire too much. And I realized, you know what? Gold is down. Maybe I don't need a whole lot of it. Maybe it's going to go down. Maybe it's not as valued as much as they thought. But it's going down, so I won't get a whole lot of it. I might get some. I did buy some gold at this period of time, and I remember specifically the number $252 and some odd cents at one particular day. The news is talking about gold has gone to a new low, and it was almost like the mainstream media newscast was talking about how gold is kind of not seen so much because it's not used as much, so that its value has gone down. Well, that didn't take long before it to move up in the other direction, and it was at this point I started accumulating a little bit more, but not as much as I couldn't afford a whole lot at the time. So, but it just steadily kept going up, and then we had the financial crisis, and with a pretty large spike in it. Then it dipped down, and then it really took off here in 2011 and 2012. So in terms of raw price, it's pretty amazing, and it's big dips in the other direction, and it never got below $1,000 since then. And quite fascinating indeed to see where it's gone. And we see a bit more volatility here, but by and large, gold really has been the more stable between gold and silver as terms of price is concerned. But nonetheless, it's fascinating to see. Now let's throw some different factors in. If we put in the log scale, we see probably a bit more of an accurate representation to see where gold has gone. It's a little bit more leveled out here, kind of gives you an idea of its climb over the years. Very fascinating indeed to see how this all comes together and is portrayed here with its spikes and dips here. But keep in mind that every time there is a large spike, a huge spike in gold, and likewise in silver, when it recovers, when there's a correction, that low is always higher than the previous lows or levels before. So very interesting indeed. Now let's pull in the inflation adjusted to get the real true meaning and definition of where gold is through history. And we can see how it differs than silver in this way. Pretty telling tale of the tape, so to speak. Look at this. If we go back 100 years, inflation adjusted prices, gold is more than half the value that it is today. Look at that. Amazing indeed. And this chart here is going just to the beginning of last year, or the end of last year, where this stops apparently. But still, there's 1322, which is kind of close to where it is today. So from 100 years ago, gold has increased in overall value as well as price. Pretty amazing indeed to take a look at that and see. Now, if we go back to the worst periods of history here, if I was doing this video back in 2001, well, it would be a different story. Gold would have lost value. But silver would have had more periods like this where it would have, quote, lost value. And if I was doing this video back in 1971, where they took off those limits, then we would have definitely been almost lost almost half of its value at that period of time. But I think those are artificial markers. We're still recovering from where the price was fixed. We let the markets set the price, and of course, obviously, there is some manipulation as well. But they can only manipulate so much, because mark my words, if the manipulators had their way, this would be way down below this number if they could do it. I think they can only manipulate it down so much. And with that being said, it's pretty amazing, and it just goes to show you that gold really is treasured, and it is the ultimate preserver of your wealth. But one could make an argument that it is a generator of wealth in some circumstances. And I think, given the multiple different factors with inflation adjustment and how different it is for different items that we spend on, from necessities to luxuries. I don't know that I would go that far in some circumstances that it is a generator of wealth, but it has most definitely secured itself by the data, the raw data, that it is definitely a preserver of wealth. And in some cases, maybe even more so than silver. But make no mistake, I think it's great to diversify. I think it's great to have both. You can make the argument that silver and gold both prove their worth with this. The last thing we'll take a look at here is the recessions that mark these periods, and we can see here how they have come into play, and how during the recession periods themselves, there's a much quicker reaction that we see, that gold climbs in price, whereas silver acts sort of as a delayed reaction to climbing in price after recessions. It's a much more immediate effect that gold raises in price during these periods. Now, in the 20th century and moving on, it was a little bit delayed here, as we saw in '82. The prices spiked up here, but I think that was in part trailing the Hunt brothers situation, cornering of silver, and so it has had some effect on gold. Now here we see also sort of a delayed effect for this mini recession here, and then it started to climb, and then after Lehman Brothers and the financial collapse or Great Recession of 2007-2008, was slight delay, but did climb up here. And I think in a way, it sort of followed, with what was going on with silver there, which was a sort of a unique situation there. Nonetheless, we see here that the average period between recessions is about 8-9 years, and we're actually due for another one, according to the averages here. So very interesting indeed. Fascinating information about gold and its price and its role, and proof that it is a preserver of wealth, and in some cases maybe even a generator of wealth. So post your thoughts below. I'd like to extend a multitude of gratitude to y'all for watching, and encourage you to please rate, comment, and subscribe.